Finding good risk-adjusted deals. Great question. Everyone should be asking it. The reality is that as investors, I think we often tend to look at return profiles on deals when we're comparing, and we say, this deal has the best return profile, so that's the deal I want to be investing in. And I think the reality in practice is that when you invest in that 20 IRR deal, if it doesn't do well, it's not going to be a 15. It's going to be a 5, and maybe it's a loss of principal. And so, educating people, investors, about how to think about deals on a risk-adjusted basis is probably the most important question we deal with internally as we think about projects we want to invest in, how do we want to present them to investors, what have you, right? And so there are a handful of things that we're looking at. And obviously, nothing's dispositive in and of itself, right? You have to look at everything in a more holistic approach. But, if you look at, first of all, the way that alpha investing is structured, and I think this is a key part of it, right? Which is we have a small number of relationships with very institutional sponsor groups, and we work with them on a recurring basis. And so that means a few things for our investors. First and foremost, increased access to deal flow, right? We want to be getting first looks at deals instead of the last look at a deal. And that's part of the way that, you mitigate risk, is by providing a wider funnel of deal opportunities. Secondly, transparency into information. We want to look at absolutely every piece of information that exists for a given acquisition opportunity. That the seller's full diligence room, all the third-party market reports, inspections, appraisals, rent rolls. There's going to be thousands of pages of documents. We want to see all of it. We don't want to take anyone's word, even though these are our sponsor partners that we do trust. We're not going to take anyone's word on that this is the kind of status of things, right? And so that's a big part of what we're doing here. And then, as you look at the way that we participate in deals, what we're always trying to do is increase the relative investment dollar of each investment that we make. And what I mean by that is when you invest with sponsors, a small number of them on a recurring basis, you're able to do things like negotiate better terms or get better deal flow. And so now that dollar we invest today as part of a large network of other investors is more valuable than that individual dollar we may have invested on our own. And that's just as we talk about structure and trying to de-risk, trying to create this idea of alpha, right? Some gain above kind of the market return or the expected market return. That's ultimately what we're looking for. And so moving away from alpha, let's talk about the types of groups we work with. And for us, the easiest way to minimize risk is by working with seasoned, experienced, institutional real estate sponsors. That word institutional gets thrown around a ton, particularly in the crowdfunding world. And there's no true way to define what makes a group institutional, but there are a lot of factors that go into it. So, what does their portfolio look like? What does their track record look like? How many hundreds of millions or billions of dollars of acquisitions has this group made? And over how long a period of time? And that's not to say that a group that's only been doing this for 5 or 6 years isn't more than capable of meeting that definition of institutional and being a group that's capable of executing. It's just one of a lot of factors that want to look into. When we evaluate sponsors, I'm sure Fark talked about this at length, we're going to go through case studies. We're going to look at old models. We're going to look at the pro formas versus actual. We're going to have discussions about what happened here. Why is this projection off by a meaningful amount compared to what you initially expected? And that discussion in of itself often leads to a place where you can say, this is a group that knows what they're doing. This is a group that meets that institutional definition.